Hi, Santa Barbara and Montecito. Daniel Zia here, the founder and lead broker associate with Zia Group and eXp Realty here on the Central Coast of California. I'm going to be delivering your June 2025 real estate market update. Before I do want to remind you that while we specialize in Santa Barbara and Montecito and South Santa Barbara County, we actually have realtor partners with deep expertise and experience covering North County, Santa Barbara, the San Ynez Valley, and all of Ventura County. So if you have any friends, family members, or coworkers looking to buy a home, sell a home, or invest in real estate anywhere in Ventura or Santa Barbara counties, they can get the exact same experience and expertise here at Zia Group, and we'd absolutely love to take care of your referrals. Now, let's talk about what's happening in kind of the economy, interest rates, as that ties into the real estate market. Interest rates are still hovering about 7%, a little bit above, a little bit below, depending on the day and the week. We're still predicted to see 2 interest rate decreases or drops by the end of the year. We'll see if that happens. There's a third that might happen. Maybe it's a 50-50 chance. And then a lot of, the powers that be in the economic and financial worlds are expecting some deeper cuts just based on some of Trump's kind of economic policy and electing a new chair of the Federal Reserve with Jerome Powell transitioning out next year in 2026. So a lot of people are thinking that there's going to be some more aggressive rate cuts in 2026, and we'll see how that goes. As far as what we're seeing in the real estate market in South Santa Barbara County, we're continuing to see strong sales activity. If you put it into context of the last 15 years, we've seen more sales than 5 of those years and less number of sales year to date than 9 of those years. If this year is the 15th year. So it's like, okay, it's a lot better than it's been the last couple of years from a number of sales. We've seen those go up every kind of year the last couple of years. And part of that's because we've seen more homes come on the market. I've talked about this a lot. More inventory, more selection. A lot of the buyers that want to buy a home that are just waiting for the right property to come on the market, they actually find properties that they like, and then they move into escrow, and we see more sales activity. A lot of the sales activity this year, as I've been mentioning, has been driven by what we've called the fire migration. People coming up from the Palisades, Altadena, Pasadena. We've seen a big wave of that the first part of that year, especially in the luxury market, and it really has driven our luxury market. So a lot of our statistics, like the median and average sales prices that are up this year, a lot of that is the luxury market skewing that data because it's done so well, while the affordable market, classify that, say, under 3 million, has been a little bit, some things are selling for a little more, some things are selling for a little less, but it's definitely a different picture than the luxury market. So depending on what segment of the market you're tracking for your own personal use or for a friend or your own personal objectives, that's kind of the bifurcation of the market, let's say, from that perspective there. Now, it is my personal belief that we're still seeing that fire migration happen. We're still looking at the number of active buyers that we have that are in that category, transitioning because of the fire event. Some of those individuals have been, testing out Santa Barbara or Montecito the last, call it plus or minus 6 months since the event, and they've made decisions. They wanted to kind of make this their residence long term, and are now making purchase decisions. They've been in, for example, short or midterm rentals, and then other people have just been a little bit on pause. They got out of Dodge and have just been kind of recovering, and maybe spending time in another home or with friends or family in other areas, and now they're kind of ready to make strategic decisions. And then others are starting to get insurance settlements or an idea of what that insurance settle might be, so they feel a little bit more equipped to make kind of purchase decisions, and they're doing that. So we're seeing celebrities from those areas still actively searching on the luxury side, and then we're seeing kind of everyone else that were affected by the fire still actively looking there. So I think that activity is going to still trickle in the next 6-12 months, and it's going to be, I think, probably the primary driving force in our market, making our market a little better this year than the last couple years. But still, the market, it's, even though the statistics say the median price home has gone up, again, that's mostly on that luxury side of things, and I think a lot of that data is skewed because on the ground, kind of individually negotiations on the affordable market, we're seeing more of an equalized kind of leverage dynamics between buyers and sellers. A lot more one-on-one negotiations versus multiple offer negotiations. And the properties that are selling have sellers that have chosen to be a little bit more realistic in their asking prices versus being skewed by some of the data showing that median sales price up and trying to get higher prices, and then realizing that it's maybe not their kind of segment of the market that has seen that and aren't kind of like super excited about the results there. So we're still seeing properties hover, most of the times they're going maybe 3% below the last asking price and about 6% below the original asking price. We're definitely, as far as prices are concerned, if you look at the median average sales price, we're the highest sales price that we've seen in history. But if you look at this statistic, again, a lot driven by that luxury market. Luxury market had 14 sales over $5 million last month, which is still a really great activity. Took on average about 3.5 months to sell, which, in previous markets, we've seen as much as 4, 5, 6, even 6, 7 months kind of average sales time there. So on average, those luxury properties are selling quite a bit more. Average sales price is hovering right around $3.6 million. We have seen inventory go up. We've seen it go up about 19%. So you've got more homes for sale, and we're seeing sales going up about 14%. But this number of sales aren't quite going up as much as the inventory is going up. And what that means is the absorption rate, or the months of inventory, how much inventory stays on the market, is creeping up a little bit, which over time it doesn't help prices appreciate. It generally is a softening nature, which is interesting, because even though the absorption rate is creeping up, we're seeing prices go up, at least on paper, though I don't know if that's really happening in actuality. Sometimes the statistics don't share the full story or reflect what we're actually seeing in kind of one-on-one negotiations or individually on different properties there. So if you have any questions, kind of to put this all in context for your individual situation, real estate is hyper local, and even a market kind of update like this, which is kind of more broad, doesn't help really bring it into your personal context, let alone kind of the local context. So if you'd like us to do a kind of a confidential private consultation for you, we're happy to. Whether you're looking to buy a home, sell a home, or invest in real estate, we can kind of talk a little bit more about what we think is going to happen the next few months and put it into your kind of personal context and help you come up with a personal plan, help you implement if you'd like. Reach out to us. Until then, we'll see you in July.